If you're like one of the hundreds of millions of people this last year that got their car insurance premiums non-consensually raised by hundreds, if not thousands of dollars, you're probably wondering how you can get that price to be lower. I've got 3 guaranteed ways we can all lower our car insurance premiums, but it's going to take a little bit of explaining. And that's because advice like shop your policy around can only take you so far when all the policies are 40% more than they used to be 2 or 3 years ago. Okay, we need to go over some insurance basics for those 3 guaranteed ways to lower your premium to make sense. First of all, insurance is just a legal agreement. It's a legal agreement for a company to cover financial damages of a risk. In the case of auto insurance, it's protecting against all the risks that come from driving. The deal is you give a monthly premium in exchange for getting damages paid for in the case of a car accident. Very obvious, right? But what might be less obvious is that if you're an insurer, you can make money in 2 ways. First is by collecting more in premium than you pay out in claims, or the cost of servicing those claims. This is called the underwriting profit. And second is by investing everyone's premium before they pay that premium back out in claims. This is called the investing profit. I like to think of underwriting profit as the insurance profit because that's the actual profit they make from being an insurance company. And for auto insurance companies in particular, there's actually a pretty big difference between insurance profit and investment profit. Insurance profit is usually 1 to 3% of the total premium collected, but investment profit is somewhere between 2 and 7% of the total premium. So if you thought insurance companies made money by selling insurance and being insurance companies, well, they actually make more money by being investment firms. Okay, so that's the underlying information we need to know to lower our premium. Insurance companies insure risks. They make money by collecting more in premium than they pay out, and they invest that premium before they pay it out. All right, so here's how we stop the bleeding. 1, less risk equals less premium. 2, only buy from insurance companies, don't buy from investment firms. And 3, report fraud. Another report fraud one is kind of weird, but I swear it'll make more sense when we get there. But until then, let's talk about 1, less risk equals less premium. If you're in the insurance industry and you want to make more money, you want more risk in the world. You want more cars, you want those cars to be as expensive as possible, and you want those cars driving as much as possible. So you want more freeways and parking lots so that getting anywhere by car is way faster and more comfortable than public transit. You want easy auto financing because it makes it easier for those consumers to buy more cars at higher prices. Those loans can feed the societal expectation that having a nice car means you're a successful person, even if that car is bought at a 9% APR. And of course, the more car loans there are, the more gap insurance you can sell, and the more comprehensive coverage you can sell, the more collision coverage you can sell, because you need them if you have an auto loan. Electric cars are probably fine with you. They're more expensive to repair, and they're cheaper to drive per mile than gas, which means more guilt-free driving if you own an electric car. And trucks are probably a great combination of both causing more physical damage in an accident because they're a larger vehicle, and being more expensive because they're a larger vehicle. So if you're trying to pay less for car insurance, you've got to push against these narratives. The guaranteed ways of reducing your risks is just the opposite of these things. If you have multiple cars, there's lots of people that have multiple cars, you don't need multiple cars most likely. You can probably drop one of them. If you're in the market for a new car, buy used and buy cheaper. A brand new car can need just as much in insurance as a car payment, especially if you're somehow doing a loan that's more than 5 years, which are getting much so increasingly common. And finally, decreasing your mileage by taking public transit, carpooling, or riding a bike for your daily commute can be a big one. At the very least, being supportive of building and expanding public transit in your area is a good way of broadly decreasing insurance premiums. Now, I think I'm going to get a lot of pushback for this type of tip, mostly because it's not the easy silver bullet that a lot of people tend to expect when you talk about cheap auto insurance. But I think it's important to start here because if we really want to fix a broken system, we've got to fix every part of it. And we as consumers are also at fault for perpetuating some of the things that make car insurance more expensive. We can blame corporate greed and poor government regulation for expensive prices and bad customer experience, and we will definitely do that here. But when it comes to real actionable solutions that we can do, we've got to focus on what we can control, and these are the actions that we can control in the short term, and a little bit of the medium term. All right, 2. Buy from insurance companies, not investment firms. There's a simple, cynical conclusion you can make when you find out that insurance companies make more from investing than insurance operations. And that is that insurance companies don't actually care about insurance, they just want the float so that they can do their real business, which is the investing. The insinuation then becomes that the policyholder is not their actual primary client and is instead just the product that their company creates. Insurers, in my opinion, are pretty transparent in whether or not they believe that they're insurance companies first or investment firms first. At the very least, do they act like they want to be insurers first and investment firms second? Do they take pride in covering people from life-changing disasters? Do they treat their employees well? And do they make their claims process easy or hard? Companies that want to provide good protection and good service are not price chasers. But for insurers who are focused on increasing their premium float without wanting to do the hard business of accurately insuring people, what's the first most sensible move for them? It's to slash price to take more market share. And this is what I think of first when I see companies competing only on price. They seem like they're not interested in covering people's very real risks and are instead only interested in getting access to their premium. It's a big red flag for me. 3. Report fraud. Insurance companies make a big deal about things that harm their bottom line, like excessive lawsuits, fraud from vendors, and fraud from policyholders. But there's an insurance truism that I don't think people really tend to catch on to, and it's that anything that costs an insurance company money today is good for their bottom line tomorrow. And it's because they calculate, report, and think of their profit as a percentage of the total pool of premium. It's all based on the size of that pool. Anything that bloats the entire system of insuring cars is good for insurance companies because they eventually just reflect the increase in cost back to policyholders through a new premium price every 6 months. So whenever someone gets a massive payout from an insurance company, eventually we all pay for it. And the insurance company gets to make even more money because we paid more money and they make more money the more we pay. And we see this all the time. From 2022 to 2024, insurance companies were getting hit with massive underwriting losses, and in some cases, even losses after investment income. And they hate that. This was because inflation was rising in costs way faster than they could raise premiums. And it was a really tragic 3 years for them until they were able to increase their premiums, which they did in 2024 and 2025. And now they're having a record year because of how hot financial assets are doing and how healthy their underwriting margins are. And that's because that is their business model, to raise prices until they have a certain percentage profit above their costs. And that's understood to be industry average and business as usual. If you're somewhat responsible and competent as an insurer, there seems to be very little actual risk. If things start to cost more as a financial layer, you just increase prices. Perhaps people buy less insurance, as I suggested earlier in this video, but the risk of losing money as a part of a car-addicted, public transit-restrained society that is forced to buy insurance as a prerequisite to drive is very, very small. Now, as consumers of insurance, how do we use this? We have to reduce the bloat. We have to report all fraud and report all instances of insurers acting in bad faith. And of course, don't actually commit fraud yourselves. This will make premiums lower, and it's not something insurers are incentivized to do themselves. Insurance companies have their own fraud departments, and while I don't think they explicitly allow fraud, nor do they will it into existence, it's also true that they benefit from it in the long term. And that's why each state's Department of Insurance has massive fraud divisions. That's what the government's role is here, is to regulate and protect against bad actors in the insurance system, including bloat. I'll put a link to California's Department of Insurance consumer complaint form in the description. It's tough to believe that a single complaint will do much, but much like voting, when everyone puts their voice together, it starts to get loud. If vendors and insurers and other policyholders believe that there's a strong regulatory punishment to committing fraud in the system, they'll stop. And that starts with everyday people filing reports with the Department of Insurance. I mentioned it before, but I think these tips are pretty unappetizing to the average person. In summary, if you want to pay less for insurance, but still have good insurance, then you have to do less driving related stuff, have fewer cheaper cars, don't buy insurance that advertises itself as cheap insurance, and report fraud to the state. But on the contrary, I think most real and substantial change is pretty unsexy by nature. Real change is usually hard work and not a magic pill, and anyone trying to sell the magic pill is not being entirely honest and is probably being detrimental to real change. So thank you for listening to the unsexy truth about insurance companies and your premium, that the system is full of risk and it's bloated, but fixing it starts with shining a light on it and one by one convincing people to take action with their one vote, which is their policy that they choose to buy. If you want to support the idea that we're pursuing here, you can get a quote for auto insurance with our company, Blueberry Insurance Agency, if you are in the state of California. Link is in the description below. Maybe we can get you a cheaper quote, but more likely we'll be able to fix your coverages. And after that, the real benefit is that you'd get access to our help whenever you need it. And then on top of that, it's just a nice win-win way to support the channel. All right, so that's all for now. Hopefully you learned something new about insurance today. And if you did, hit the like and subscribe button, and I'll see you next time.